With volatility spiking dramatically on Friday, is there a possibility that we could be in for a little bit of a rough Monday? Well, in today's video, we'll talk about how logistically sound that concept is and whether or not we should prepare for some more volatility in markets. Again, on Friday, we did see some pretty impressive selling immediately starting out in the day that was ultimately, however, bought back by the bulls. Was this sort of a dead cat bounce, or is this actually going to head higher? Well, I know I'm talking in both directions right now, but I'll share in this video exactly what my thoughts and my opinion are on these things, and I'll even show you positions that I'm in. I talk about this frequently on my channel, but I am frustrated when I watch YouTube channels about trading where they just kind of say the market could go up or the market could go down. But in today's video, my goal is to show you exactly what I am positioned in, as well as my thoughts on stocks, commodities, and of course, crypto as well, as we had a very interesting week this past week. Now, again, if we take a look at the S&P 500 as our barometer for starting out, what we can see here is the SPX essentially saw about a 4% drawdown peak to trough. When we take a look at the NASDAQ, we can see that from peak to trough, and you can see I'm revealing a little bit of my bias here with this long position that I'm in, we saw about a 6% drawdown. Now, 6% drawdowns are not outside of the realm of normality. Now, they kind of feel that way because we've been in a market that has not had 6% drawdowns in a while. In fact, this was the largest drawdown, believe it or not. If this is, going to bottom out and continue moving higher into next week, which is a possibility, right? We never know with certainty, but I think that it could. If it does not, though, maybe we'll see a deeper, maybe a 10%, maybe an 8% correction or a pullback in this market. I think it's very possible. But when it comes to this pullback, this is actually the biggest pullback that we've gotten since the April sell-off, believe it or not. You can see that over here, we had about a 3.8% pullback, 2.8. We had a pullback over here. This was the biggest one, 4.25%. Actually, this might have been slightly bigger. Nope, a little less. And even this October move was about 4.7. So this move that we saw kind of capitulate and reverse on Friday was down over 6%, which is actually a pretty good little haircut within the context of a bull market, though. It is still very normal. Now, again, if you want to talk about AI rally is done, it's finished, it's going to move lower, I think you're probably talking about a bigger corrective move. Now, if I take a look at the S&P 500, we've talked about this many times, and I keep saying this phrase, keep your eye on the ball. And if you're not American, it's a baseball reference, but when somebody is pitching a baseball to you, they always say as a kid, keep your eye on the ball. It helps you to line the bat with the ball, basically. Well, eye on the ball is a simplicity concept where basically we're saying, look, if you are super bearish on this market, price action is not yet, in my opinion, on your side. Momentum still favors the bulls. Now, if you're somebody who is cautious on this market, I think that's perfectly valid to say, hey, we've had a really good run. Maybe we're due for a little bit of a corrective pullback. That's fine to have that kind of cautious approach, but to assume the top is in and we are moving lower, I think is a very low probability bet in this market. And I'll tell you why. Again, this market has had multiple trials where it is shot lower, but then ultimately reversed higher by the end of the month. And we've seen that consistently throughout this year's volatility. Look at the monthly candles, and you can see multiple times we've had attempts from sellers to come in that ultimately the buyers just bought into. I would look at this market, as I said in my video yesterday, innocent until proven guilty. This prior monthly bar, if we can stay within the context of this range without closing below it, I'm going to call that whole thing a buying the dip opportunity until proven otherwise. However, if I'm wrong about that and we completely close through, then I'll be the first one to stop out of my positions, get out of the way, and say, okay, we may actually be looking to move lower. But right now, that's not something I can assume is going to happen. So back to the daily chart. We've also got our moving averages aligned very nicely. We tested for the first time in a little bit here the 50-period moving average. This has been acting as dynamic support, so I'm building technical confluence here that says innocent until proven guilty. We should move higher. Now, again, is that a fair thing to just conclude is definitely going to happen? No. And that's where people will go into, get themselves into trouble, is they'll say, look, it bounced off. It's got to move higher, right? Well, it could be different this time where, again, we actually do see the breakdown. So we want to be prepared by stopping out and controlling risk, small position size, all that stuff that we talk over and over about on the channel. But my opinion is that the path of least resistance is this market is still bullish on the higher time frames. I'm not going to assume that the top is in just because we've had a little bit of a pullback. So I bought on Friday. I went long over here on October 10th. And then I ended up trailing out on this past Friday, this past Friday. And then I decided to re-enter the trade. We started, bouncing. We had, I still very much like the bull case for the NASDAQ, which I'll talk about in just a second. And then we're going to talk about some other things because I did a full breakdown on the indices. I'm going to probably pause there, kind of not go too much further on the indices for now. I did a full video yesterday, so if you want to really dial in my bullishness on the indices and why, I talked more about it there. But basically, I'm long the NASDAQ. I shared this with members. We also see this on the EdgeFinder's top setup system, which if you are new to my videos, the top setups algorithm is a simple kind of tool that the EdgeFinder, which is the product that my team has built, simply looks across a collection of sentiment, technical, and economic data reports. Now, the simple view just kind of keeps things all tallied up, but we can also take a look at the full thing to get an idea of what EdgeFinder is tracking for us. What you can see here is that we have our assets on the left. So we have all the different stocks, currencies, commodities, etc. on this listed on the left. And then what we can see here is EdgeFinder is keeping an eye on the commitment of traders data, retail positioning, seasonality, trend, GDP statistics, manufacturing and services PMIs, retail sales, consumer price index, the producer price index, personal consumption expenditure or PCE, employment change, unemployment rate, and interest rates. This software is tracking all of that stuff, ranking and filing, and helping to build trade ideas based on high confluences across this data. I use it every single day, and for every single one of my trades, I'm consulting with the EdgeFinder and seeing what it's saying. Now, it's not a just because NASDAQ is bullish, or in this case, very bullish, it's not a signal to just go buy NASDAQ just because. It's rather just a simple tool that is saying all of these metrics, or at least most of them, are generally suggesting bullishness for the NASDAQ, so you may want to go look around and see if there's anything that looks good to you. That's how I use it. That's how I've used it for years, and that's how I've used it to essentially produce some really good trading results over the years, and I've talked about those publicly on my channel. Let me show you. What you're looking at is a almost 6-year-long track record that I have done publicly on my account over the years. It's a Webull portfolio, which is a U.S. regulated brokerage. I'm up 288%, which has pretty aggressively beaten the S&P 500 passive benchmark. The reason I show you this is because, again, if you see my videos, you spend time watching them, you invest time listening to what I have to say, or you are considering a product that we sell, I want you to know that it's backed by real results. And that's why I show these in my videos periodically. Again, I'm not saying I'm a perfect trader by any means. There's a lot of times where I'm wrong about stuff, but I just want you to know that if you're watching my videos and investing a lot of time, you're at least knowledgeable that, okay, I've actually made money with the stuff that I talk about. I'm not just sounding, like a know-it-all. So anyways, with that said, I am still bullish in the indices, as I've discussed, S&P, Dow Jones, NASDAQ. Also like foreign stock markets. Maybe we'll take a look at that. Also want to talk a little bit about Bitcoin, because Bitcoin, I've got some questions recently about Bitcoin. Is that bullish? And precious metals as well. By the way, before I push on, if you don't have a copy of the EdgeFinder and you're a regular viewer of my channel, do not miss our Black Friday discount. It just kicked off here recently. It's 40% off for a limited time. All the information, if you want to get a copy of EdgeFinder, can be found linked in the description down below this video. And the promo code that you can use there is just punch it in at checkout. It's YTVIP. If you punch that in at checkout, you can get 40% off the EdgeFinder. And the best part about this, it's a one-time payment. Now, not one time per year, not one time per month. You pay once, and then you get access to EdgeFinder, and you get access to all of our future features. We've had people who bought this product in 2022 when we launched it and have, from all the stuff that we've had, it basically they paid once and they've continued to benefit from all the new additions. And there's way more stuff coming. This thing never stops getting better. We are constantly working to improve it and adding more indicators and tools to help traders find better setups. That's what we do. We're a software company out of Atlanta, Georgia. So if you've ever thought about getting a copy of the EdgeFinder, at least take some time today in the description, explore the product and see if it would be beneficial to you so you don't miss our biggest sale of the year. And again, that promo code is YTVIP. Okay, so let's take a look at precious metals. So precious metals, if I take a look at gold, something really interesting happened that I want to talk about gold here. So if I pull up the put to call ratio and look at gold, what we can see here, and I talked about this in my video yesterday with the S&P 500, bearish sentiment got crazy on Friday, which was another reason I really like the buy setup. Is when people rush to get bearish all at once. That's actually been one of my best entry timing points, is to wait for confluence with the macro plus the put to call ratio plus price action. That's where I found some of my best trades over the years. That's how I found that trade, by the way, on October 10th, where I bought the NASDAQ. I mean, it was a spike in bearish sentiment, and we can see it happened again on Friday. Will that produce another rally in stocks? We'll see. My educated guess is I think it will, but we'll see if I'm right or wrong. But we also saw it in gold, and this was really interesting. So this past week, I mentioned that I had closed my short position in gold for a small profit, and I'm glad that I did, because you can see now some interesting stuff is happening where bearish sentiment is actually spiking in gold. So the popular crowd has moved into being bearish gold. So if I take a look at price action on gold, moving averages here, still, I think that we could still see some pullbacks into these longer term moving averages just as a healthy corrective pullback. And I'm not necessarily willing to go long gold at this time. There's some reasons. I think the macro is not perfect for it at this time. I'll talk about that in just a second. But from a price action perspective, you've lost the 20-day moving average. I think we could test either by waiting for this moving average to come up and kind of catch up to price, or price coming down to meet the moving average. I would not be surprised if we do get a test of the 50-day moving average in the next couple days. With that said, is it a buying opportunity? Well, again, you've had this monster uptrend this year. We've been cooling off. And if we get some Fibonacci retracements out, let's talk a little bit about where that leaves us. So if we go Fibonacci retracement from the swing low, the start of this massive movement, what we can see here is that we've already tested the 38.2% retracement. Now, you can see that we've tested this area and we have not seen a sharp rally from it. What that signals to me is that gold may truly be in kind of a consolidation or wait mode, because my thought process was, okay, if the 20-day moving average, initially showed some signs of life, but then rolled over and failed, and we came down to the 38.2% retracement from a technical basis, that makes a lot of sense. We tested the 20-day, tried to move higher, failed lower. 38.2% retracement is now in play, but we're just kind of chopping sideways the last 2 weeks. So for me with gold, I just think that there's other things I'm a little bit more interested in trading at this time. And I wouldn't say I'm very bullish or very bearish at this time. So my thought process is I don't really have a directional bias on it. I think, the long-term trend is still up. I just think we could still test some of these moving averages, as well as perhaps even the 50 or 61.8% retracement. And in that, I would still say long-term, you've still got an uptrend. The short-term does not look so trendy to the upside. So if I take a look at the 4-hour chart and let's just look at price alone, price action on the 4-hour chart still looks bearish, right? You had double top, failed support, retested this area, sellers came back in, and now we've just been choppy in this range here. So my thought process on gold 4-hour chart looks too bearish, or at least kind of neutral, just choppy. So I don't love price action on gold. I do think that this is a reason why I would be a little hesitant to get bearish, but this is not the only reason. Let's go to our market scanner page and let's specifically look at gold's reading and see what we have here. So we have a +4 score on EdgeFinder and a +5 score for new viewers. A plus or -5 is the threshold for bullish setups or bearish, okay? So what the EdgeFinder does is it looks across all these different data points: technical readings, institutional data, sentiment, inflation, jobs market data, and economic growth data. And it tallies up scores. And it says, okay, if we have a 5 or greater score, that is considered a kind of net overall bullish perspective. And if it gets a -5 or lower, we call that a bearish read within EdgeFinder. So a +4 is obviously much closer to a bullish reading here. And so I'm not bullish but I am definitely unwilling to be very, very short or very long at this time. If we take a look at our technical viewpoints here from the moving average perspective, we already know this, but the 50, 100, and 200 day are still intact. We've been moving with very low volatility here recently. Another reason why I'm kind of just waiting for markets to make a decision on this. If we can get a stronger breakout one way or the other, that would be preferential for me with gold. Technicals are mixed, right? Institutional activity, slightly bullish, but mostly mixed, not really particularly great in terms of the COT data, though to be fair, COT data is quite delayed due to the government shutdown right now. Crowd sentiment, we just talked about this. Crowd got very bearish on gold. That's a bullish reading. However, economic data looking kind of bearish. Why is that? Well, for that, let's now move on to the US dollar analysis, which is, of course, partial to or very important to this concept when we're talking about gold. So if I look at the US economic heat map, what kind of story do we get from this? Well, what we can see here is that the US dollar impact, keep an eye on this column. What this does is it breaks down what the EdgeFinder's interpretation of these economic data points is showing for the US dollar. Now, if you're watching for stocks, you can also see we have a stocks impact column as well. And if you're wondering, well, where's gold? Well, gold and silver is just essentially this reversed. So everything here, just picture it as reverse that for precious metals. So if I'm looking at this and I say, okay, well, most of our indicators, GDP growth looking better than expected, manufacturing PMIs miss, that's weak for the dollar, services PMIs beat, retail sales beat, CPI and PPI, those things were slightly lower than expected. That is bearish for the dollar, right? Less inflation means Fed can cut rates sooner. Let's see. Now, that's not the only thing they look at, by the way, for inflation or for cutting interest rates, but it's a key component. PCE neutral. So we'll just say neutral, wage growth neutral, unemployment rate neutral. What this is meaning, by the way, we're looking at the actual data points that came out versus forecast. That is how we are ranking and filing this stuff. So if we take a look at initial jobless claims, we can see jobless claims. We are outdated on this, to be fair, like back to September 25th. Like we haven't gotten data in a long time due to the government shutdown. JOLTS job openings. ADP we did get this week. This was a better than expected read, which is bullish for the dollar. And non-farm payroll, very outdated, but still the latest data point, negative for the dollar. Overall, we have a slightly bullish read for the US dollar. That is part of the reason why I'm not really willing to get aggressively long gold. Now, if jobs data starts to materially weaken, let's say ADP numbers come in poor, let's say unemployment rate spikes, wage growth, if these things start to materially weaken, then yes, gold will get stronger readings with an EdgeFinder. It's monitoring this stuff for us. That's the whole utility of the tool. It watches all this stuff and it says, what did it find for the US dollar? What did it find for stocks? What did it find for gold? And automating that process. So everything I just did manually, the EdgeFinder does automatically. But I explain it so that we still understand what EdgeFinder is looking for if you become a user or if you are a user of EdgeFinder, you kind of understand what it's thinking through. I think it's important that you don't just blindly say like, oh, EdgeFinder found that, so I'm just going to do this, right? You still want to understand what EdgeFinder's thought process is on these data points before you kind of use it within your trading analysis. So you can see gold is not on this list, but what about silver? Silver is on the list. Let's take a look at it. And why is silver getting such a bullish rating? Well, silver, if we go to our market scanner, let's go silver. What's going on here with silver? So silver's getting a technical read here. It actually shows some stronger seasonality in the month of November. We also have 4-hour and daily chart trend to the upside. All of our moving averages looking pretty healthy here. And we have the latest in the COT report was very bullish for silver. We still struggle with the economic growth data not being super great there, but if I were to trade a precious metal right now, it would be silver longs. Now, what am I looking for in silver? You can probably imagine where I'm going here with this. Would like to see a breakout here to the upside. And from there, maybe we have a potential trade on silver. So if I take a look at the daily chart, again, uptrend is still intact. A lot of momentum this year. Would like to see from a daily perspective this kind of move here. Now, let's get our moving averages on. Keep it simple here. You can see we are below the 20-day moving average, but the 50, 100, and 200 are still very well intact. So I still like the bullish setup on silver more than gold, but I'm still going to kind of watch that hesitantly, watch price action and see what we can get there. Let's take a look at the DXY here. And from a daily chart perspective or even a weekly chart perspective, recently you can see things have just been very choppy for the dollar. Now let's go back to that daily chart. So if I'm looking at daily chart perspective, we did just tap into a major level of resistance, which I think could actually have room to push price lower in the short run. Now, that could be good for precious metals. And it could also be good for counter currencies to the dollar. Maybe the Australian dollar, the euro, the British pound have a little bit of reprieve, a little bit of upside relative to the dollar due to this. We'll see. However, the economic data that I just went over for the US dollar doesn't look too shabby, but here's the thing with currencies. If you are now taking a look at currency pairs, what I would encourage you to do is if you have EdgeFinder, go to your economic surprise meter, because remember when we looked at the economic heat map for the US, right? When we were going through all this for the US, well, we also have that for all the other currencies, right? The majors. So if I look at Europe, if I look at Japan, if I look at Canada, right? Each one of these currencies has its own economic data too. So if you're going to be a currency trader and focusing on macro, you have to have your eye on all this stuff. So that's where, again, the economic surprise meter helps us to compare these currencies across the board. So what we can see here is that while the dollar is getting 60% of its readings looking pretty bullish, Canada, Aussie, they're getting higher readings. So what this would tell me is that maybe the dollar is a good pick against weaker currencies, but there's not that many. Swiss franc, maybe a little bit. So this is where, again, you can get a decent reading from US economic data, but it's all relative. Remember, currencies are a race. If this racer is pretty fast, but the rest of the racers are just as, if not faster right now, who's going to win the race? The faster runner. So that's the thing, is when you're talking currencies, you can't just look at one. You can't just look at the US economy and say, oh, the US dollar is good or bad. You have to look at the other economies too. Again, the due diligence component of currency trading is you can't just look at dollar. You have to look at, and if you are just going to look at dollar, by the way, you're better off trading gold and silver, right? If you're going to trade currency pairs, you have to look at the other economies. Now, even with gold and silver, I think you should look at all economies, which is what we have this tool right here for. The Global Economic Surprise Meter looks across the board. And this is another reason why I'm a little cautious to get super bullish on precious metals, is our overall kind of economic average has shown sort of sticky inflation and also some growth in economies that has been a little bit better than expected. That, again, suggests maybe not so much bullishness on the gold side or silver side, because central banks may be poised to keep interest rates elevated for a little while. We can also see this in yields, right? So government bond yields are a great way to track whether or not central banks are likely to cut interest rates. Now, the 10-year has been coming down, but on a big picture, we don't see drastic fall down in rates. If we take a look at Japan, you can see the same story. Now, if you expect the global central banks to cut interest rates very aggressively, you'd probably expect these things to be moving lower more, right? But that's not really what we see here. Europe, UK, you can see they're all elevated. So that tells me that, yes, the bond market thinks that we're going to get some rate cuts this year, but it's not going to be drastic, rapid rate cuts, which, by the way, that's what precious metals love. They love rapid rate cuts. And now, part of the reason that gold and silver have been up so much in recent years is because central banks have gone from no cuts or even hiking rates to now cutting rates to holding rates, right? So that transition period over the last few years has caused a surge in precious metals. Now, there's also been the worries about de-dollarization and other themes that have also helped to buoy gold and silver prices higher, but a lot of it is fiat currency losing value due to central banks globally feeling the need to cut interest rates. If that story is coming to a close, look out below. Gold and silver can move much lower. This is why you're kind of hearing me say, I could see gold prices moving both ways. I don't have a really solid, decisive directional bias on the precious metals at this time, and just prefer to trade other things until I get more of a clear read on gold and silver. So if you're trading currency pairs, though, which ones look the strongest? Well, the Canadian dollar looks pretty good. The Australian dollar looks pretty good. Canada specifically had some really good economic data in the form of their jobs data, right? We had unemployment rate come in better than expected. We surprised in a positive manner. We went down in unemployment rate for Canada. And so that was a very welcomed and bullish thing for the CAD. We can see that when we take a look at CAD JPY, for example, right? So if I look at CAD yen, moved up on Friday off of that jobs data report. We were supposed to, by the way, get jobs data for the US, but of course, government shutdown continuing to hold us back on that front. Dollar CAD moved lower in response to a stronger CAD due to, of course, stronger jobs data. So again, if you're a currency trader, here's the final thing I'll give you here is if we take a look at the top setups eco page, if you really want to look at currencies just based on economic data, which by the way, I know a lot of people in our VIP group talk about doing this. They trade the currency pairs that they watch primarily based off of economic data. So the economic score here is just looking at all of our growth, inflation, and labor statistics data comparing two currencies. So we have euro dollar actually getting a strong read, Aussie dollar as well, dollars are getting a strong read. And so I thought that was kind of interesting to look through. Canada, CAD Swiss, CAD yen, these things look to be getting some strong readings, Aussie Kiwi as well. And if we flip things around, take a look at some of our weaker pairs, you can see we've got kind of a roster here. You have pound CAD, Kiwi CAD, Euro CAD, pound Aussie. Let's actually just take a quick look at some crosses against the Canadian dollar really quick. So Euro CAD, for example, bearish reading here. I would like to see a break of support around this area, 1.62. Pound CAD, let's just see what's going on over here. Pound CAD. Pound CAD still really range bound. Would like to see this thing maybe break through the structure. So yeah, that's how we would look for, again, currency setups. Dollar CAD, interestingly, actually getting a bearish reading here, -4. That's a pretty low score in terms of economic data only. So if I look at dollar CAD again, maybe we're topping out here. Again, dollar CAD has been on the rise for a couple months. I would not be too quick to assume, however, though, that is the case. I'd like to see this kind of higher low and higher high sequence fail to kind of hold. What you could do is, if you wanted to get fancy with it, just wait to see, here's your last kind of low point. Let's see if we could actually fail to hold that area. So if that were to happen, you may actually have kind of a lower low, lower high sequence in formation for the dollar CAD. But yeah, we'll continue to watch and monitor that. Now I keep hovering over this. Let me show you this chart here really quick. What you're looking at here is valuations on stocks. And I think this is a really important thing for us to look at because stock valuations are very high. And specifically, when we take a look at some sectors really quick, right, we have XLY here, pretty much everything. Healthcare, if we take a look at utilities, if we take a look at real estate, what you can see, everything is expensive. XLP, this is consumer staples. Technology stocks, also very, very expensive. And now each one of these ETFs, if you're unfamiliar with this list of things that I'm looking at, these are each ETFs that track specific sectors or baskets of stocks. So XLI is industrials, XLF is financials. And yes, you can trade these things. In fact, it's a big thing of what I trade. I trade sectors quite a bit on via ETF, right? So I'm trading, for example, here's a trade that I have on for the last few weeks. This is consumer discretionary stocks, XLY. I also have a trade on, that's SMH, which is the semiconductors ETF. I bought this on Friday. So again, I love trading ETFs because I can get real specific with my ideas where I want to trade, and it's my favorite way to trade. By the way, brokerage that I'm using is Webull. If you want free stock shares, or I think they have even some extra sign up perks going on right now if you use the link that's in my description. So check that out if you are not already. Use the link in my description down below. Number one, it's a referral link, so transparency there. You will be helping out the channel if you choose to use that link, but also they have some special offers for my subscribers specifically. So I've used Webull for 5+ years, so I'm super honored to be affiliated with them. They're a great brokerage from my personal experience, and I would encourage you to at least check them out, see if they're right for you, do your due diligence, so on and so forth. So yeah, I have a lot of ideas that I'm able to do with ETFs, and that's why I trade them. But with that, by the way, how do I trade them? I use the Stockbox. If you don't have Stockbox, take advantage of the Black Friday sale. I know you guys, a lot of you regulars may have had the EdgeFinder for a few years. If you've enjoyed EdgeFinder, hear me out for a second. I know a lot of you guys, we have a lot of super fans of EdgeFinder. I'm one of them. I was the first one, so, get in line. But I was the first super fan of EdgeFinder, but I know a lot of people really love our tools, and I'm super honored and honestly thankful every day to have an audience of people who share an interest in markets, as well as customers who I absolutely am thrilled to serve and work for every day with the tools that my team and I build. We love doing what we do. And if you don't have Stockbox and you are somebody who is interested in stocks, ETFs, futures, options, etc., consider checking out, especially if you enjoyed the first movie, come back and see the second movie. The second movie is the Stockbox. We've launched it recently, or relaunched, I should say. We totally revamped the product, and Stockbox is alive and well. I use it all the time in my own trading, and if you don't have a copy, stick around for a few minutes. I'll show you some stuff in the Stockbox. Okay, so Macro Screener has been kind of refitted in the Stockbox specifically for stocks. So if you're an index trader or an ETF trader like myself, the cool thing here is that we can actually look at this stuff in isolation to specific sectors. So EdgeFinder looks at stuff like just from an overall index level, like S&P 500, Dow Jones, etc. The Stockbox goes deeper in the sense that it goes into ETFs like XLY, XLRE, regional banks, the Russell 2000. Like, it gets really granular with it, and even goes down to individual stocks, which we'll talk about in just a second. So if I'm looking at the macro screener, you can see stocks are getting an overall pretty strong score within the Stockbox. And then we can also see sectors that get strong macro scores based on the current the landscape that we're currently in. XLY was a buy for me because I liked the Stockbox reading, getting a really strong confluence based on these technical factors, or these, I should say, fundamental macro factors. Real estate also getting a strong reading, KRE, IWM, etc. Then, in terms of how I use this thing, is I then go to the top stocks page, which what's cool about top stocks is it's got over 130 stocks at this point. I think we've added to the tool, and I filter specifically even for individual sectors, right? So if you are watching along frequently, you may know I'm long on Amazon stock. So if I pull up Amazon, AMZN, this was a stock trade that I have been in for a while, that I bought with the help of Stockbox. So I bought, Amazon back here. It was one of our top rated things. And I've actually been adding along the way and still think that there is more upside in the stock. We had a nice explosive move higher. We broke through these highs. So again, if you're a stock person or interested in exploring stocks in more detail, consider checking out the Stockbox. It is also, like I said, available for 40% off during our Black Friday sale. In case you already have EdgeFinder and you want to explore and expand your tool set this year, check it out. Here's some more stuff. The historical PE ratios tool is cool. We also have other tools like, for example, the earnings report tracker. So if we take a look at, if we want to keep an eye on how stocks are performing relative to earnings estimates, this can be an excellent tool just to browse quickly a selection of stocks. So again, I really like Amazon. So if I go take a look at Amazon, I can see how they've been doing in their earnings reports relative to expectations. Now I can go deeper. If I want to look at Amazon and really get into why is Amazon getting the score that it's getting, well, just like with Stockbox or with EdgeFinder, you can go into your market scanner page and get a breakdown of what it's found. You can also do that within Stockbox, but for individual stocks. So we've selected for Amazon, and we can see some of the financials. The Stockbox focuses heavily on financials as well as technicals and institutional activity. So forward PE for Amazon looks relatively attractive compared to the 3-year average. The trailing 12-month PE ratio looks better than the last 3 years on average. So you can see what it's kind of thinking through. It's looking at the financials as well as other factors. So just a little plug there. If you want to check out Stockbox, the link is in the description below. And again, there's your promo code here is YTVIP down below in the description if you want to check it out. So anyways, let's see, what else do we have? Do we have anything else? I mentioned I wanted to do crypto, so let's just take a look here at cryptocurrency. Now, I mentioned earlier that EdgeFinder specifically is getting a decent reading for Bitcoin. Now, what I don't love about Bitcoin is from an entry perspective, technicals are not super ideal. Now, there is something I want to talk about with Bitcoin into year's end in the seasonality department, but technicals, I'm not super convinced. Now, what you can see here is all of our moving averages are not giving us a lot of hope. Now, why is this? Well, again, this is based on the daily chart perspective. And when we take a look at moving averages, what was this kind of upward trend has faded into sort of a lackluster or even a short-term downward trend in Bitcoin here recently. So one thing I would say is that if you are like, pause really quick. If you're, first of all, 35 minutes into the video, thank you very much for watching my content. I greatly appreciate people who take the time out of their day to watch and listen to what I have to say. I also wanted to give you a little bit of a compliment. If you are doing okay, like let's say 2025 hasn't been a great trading year for you, but you're doing better than last year, good on you. A lot of people don't give themselves any credit for improvement in trading because they don't know what improvement in trading looks like. If in 2024 you were just blowing account after account after account, and in 2025, let's say you blew less accounts, or you haven't blown an account, you just are sort of at the break even or just losing a little bit, that is progress. Now, the reason I'm saying this after looking at the Bitcoin chart is because, guys, we are talking about an S&P 500 move that is a couple percentage points, 4% off the highs. And I have seen across Twitter this same movement in Bitcoin, which is a 21% drawdown. I know that's not nothing. That's, a lot of percentage, but in Bitcoin world, that's not that out of the ordinary. Bitcoin has drops like this frequently. It's actually kind of standard to get 30% drops. Now, the reason I'm saying this is that if you're doing okay in this environment, understand that there's a lot of people who have gotten completely wiped out by crypto this year. A lot of people have been very leveraged. A lot of people have been making huge bets. We're living in a society that is more gambler focused than ever. It's actually kind of a bummer. Like, I don't know for my sports fans out there, I'm not one of you, but I'm not a big sports person, but I know from my friends who are, everyone points out that sports betting is on every single commercial when you watch sports. Every single, prop firm is trying to get you to spend a bunch of money with them. And they're not bad. Sports betting or prop firms are not necessarily bad. It's just that people abuse them and they treat them like, alcohol or sugar, right? It's anything too much is bad. And so people take cryptocurrency and they've been leveraged the heck out of this stuff. And they do it across all their trading. Unfortunately, it's been a really painful year for a lot of people. But guys, you're talking about a 4% drop in the S&P 500. This is like, I don't want to, if you've had a tough time in this, I get it. A lot of people learn a lot of hard lessons, but this is nothing. This is not a hard pullback. Like, this was difficult. A 20% drop, 21%. I mean, this blew out a lot of options traders due to, implied volatility going insane. That was a 20% drop. That's something to look at. Well, back in 2022, I traded during this. We had a 27.5% drawdown. I traded during 2020. We had a 35% drop straight down. So if people are blowing up on a minus 4% drawdown on the S&P 500, which is a barometer for risk assets at large, what's going to happen if you get a minus 35% drop in the S&P 500? If people are blowing up on minus 4% drawdowns on S&P 500, you can only imagine what a minus 35% drawdown in a gambling obsessed world that we're living in right now, what that will do to people. I'm not happy about it. It's so, truthfully kind of a sad thing. I'm telling you this because if you've made it 38 minutes into this video, I'm not a doomsdayer. If you watch my videos, I'm bullish on the markets, but prepare yourself. Do not be one of the people who will lose everything when this inevitably happens again. Markets drop. Markets are volatile. There's gains to be made in markets, and hence, because there's gains, there's also pain, right? No pain, no gain, right? It is part of the game when it comes to trading or investing. If you are trading crypto, you're talking about the ultimate example of that. There's been tremendous gains to people who have, bought in at decent times and held through the pain. It doesn't mean it's going to go on forever. Crypto could drop to zero. But the point is, people who have experienced gains have also had really big amounts of pain as part of the game, right? All I'm saying is please be careful out there. A lot of people are going to make big mistakes in this, if you do get a true bigger drawdown, If you do see 8%, 10%, I would encourage you, take some time today. What would that mean to you? If you are long a bunch of crypto, if you are long a bunch of stocks, ask yourself, can you truly survive a 25 or 30% drop in the financial markets? Because let me tell you something, it's not a question of if that will happen. It will happen. If you stay invested the next 15, 20, 30 years, it's going to happen. It's part of the game. If you don't know the game, I'm telling you from experience, it comes with the territory. So if you are not prepared, you are preparing to blow your account. So think about this stuff. That's what I would leave you with. Last thing I'll say, like I said, if you want a copy of the EdgeFinder or if you want access to the Stockbox, everything is on super sale. Our Black Friday discount is going on right now. All the information can be found in the description down below. Thanks very much for watching, guys. Have a great week ahead.